In the financial sector, we are witnessing this convergence of unprecedented forces that are reshaping this landscape. There's the great transfer of wealth of $70 to $90 trillion in the next 20 years from baby boomers to millennials. That's underway. And then it coincides with the emergence of new currencies, digital assets, and of course the advent of blockchain technology, which is basically a revolutionary new type of internet focused on transferring and managing value. L1 is founded by Gen Xers. Now, when a business is driven by more than just the bottom line, when it's fueled by personal principles and ideological commitment, visionary companies like L1 are born.
And I had a daughter, and naturally that kind of shifts your reality and it changes your goals. I wanted to get a little bit more serious about financial planning. Naturally,
and you started going out looking for some advice, and you didn't find it, right?
Like my co-founder and I, there's hundreds of thousands, millions of people like ourselves who have the same challenges. And so that, yeah, I don't work with an advisor. I hold most of my wealth, or a lot of my wealth, in crypto, and I have no way of really getting financial planning, wealth management, tax planning, estate planning help, because there's nothing out there for me.
And enter L1.
Enter L1. Investors want to beat the market. They are very much disillusioned by the traditional markets. They are not looking to allocate to a 60-40 portfolio. And so I think every advisor out there is thinking, how do I basically continue to help my clients beat the market and see returns, and in this case beat inflation, which has been advisors are differentiating themselves. They have to differentiate themselves. So I think differentiation can come from all asset classes are going to be tokenized. It's not a matter of if, but when. Or as it happens, everybody that works in the business is going to need tools to work with those tokenized assets. So I think this is going to create a lot of efficiencies. It's going to allow advisors to scale, grow their practice, and focus on what truly matters, which is really.
In this interview, we're diving into Miguel's journey and the pivotal role that his company plays in this rapidly evolving environment. And we're going to be showing you, by shedding light on these transformative forces and the innovative solutions emerging in response to this. So join us as we discuss with Miguel Kudry these seismic shifts in the financial sector and how investment professionals can seize the opportunities of this digital age. Why are you doing this? Why are you in this business? What prompted you to really be motivated about this?
So I've been an entrepreneur for much of my life. In 2016, I started investing in crypto. Both my co-founder and I got into investing in crypto in 2016. We built our first company together in 2017 in crypto. And so we never left the space since we started investing. We knew we wanted to build something. At the time, we built a non-custodial wallet for Ethereum and then for Bitcoin. At the time, we built it because we thought the market needed a non-custodial wallet that kind of showcased the different use cases of crypto, but it was really early. And then, much like most people that get into crypto, once you're in crypto, it's very hard to leave. You just go down the rabbit hole. We became even more invested. We were lucky to generate some wealth on chain, and that wealth has not left off chain. It remains on chain. I personally started a family in 2020, and I had a daughter, and naturally that kind of shifts your reality and it changes your goals. I wanted to get a little bit more serious about financial planning. Naturally, I start talking to different advisors, wealth managers, and kind of stumbled upon this opportunity of Like my co-founder and I, there's hundreds of thousands, millions of people like ourselves who have the same challenges. And so that's truly what prompted the initial idea. But then we realized it was a much bigger opportunity. All asset classes are going to be tokenized. It's not a matter of if, but when. And when that
Absolutely.
happens, or as it happens, everybody that works in the business is going to need tools to work with those tokenized assets. So that's where we're going.
As a crypto educated investor, you were trying to figure out, okay, what do I do with my investments? How do I secure my family? And you started going out looking for some advice and you didn't find it, right? So
That's right.
you're like, hey, there's something that's needed here.
Absolutely.
When you were going out to, looking for advice, what kind of walls did you hit?
Well, I think the biggest one is the fact that advisors haven't had a tool to really like I go to an advisor as a prospect and I tell them I have all my money in crypto. They're like, well, I mean, that's crazy. I mean, they first of all, they think it's crazy because they can't see those assets. Like I could actually have most of my wealth in stable coins, and that's crypto, that's cash. But to them, because they don't have a way to visualize those assets, they really don't know how to react. And so they first of all, they don't see what I hold, so they can't even begin to understand my profile as an investor. So they can't really start talking to me about my goals. And most of these conversations were like, okay, just sell and liquidate all those assets, and I'll open up a brokerage account for you, and I'll create a portfolio, and you can
Oh
allocate.
no, you're
And I was like,
kidding me. You're like, what?
yeah, that's a
What kind of
non-starter.
advice is that?
Exactly. So first of all, it was a lack of tools to really understand me and my assets and see my portfolio. And then from there, it's just kind of like snowballs. Like if you can't see what I hold, you can't recommend new positions, or you can't help me manage my risk. You can't do anything.
So you and your partner are like, we've got to do something about this. Let's
Exactly.
have a powwow and see what we can do.
Yeah. First of
Is
all, we
that where
started
the,
talking to other
go ahead.
people who we've known, people that are builders in crypto, friends who have invested in the space since from the time that we started investing, and we started seeing a pattern. We started seeing very similar feedback. Yeah, I don't work with an advisor. I hold most of my wealth, or a lot of my wealth, in crypto, and I have no way of really getting financial planning, wealth management, tax planning, estate planning help, because there's nothing out there for me like this.
Mm-hmm. And enter L1.
Enter L1. Yeah,
There
so it's
you
been
go.
a couple of years, and we started building in the bear market of 2022, and so on the true believers and the people that needed something like this. And we're now in a very different market, much more mature, with players working on tokenized products and bringing these products to the masses. And it's going to be an interesting next few years for sure.
So tell us a little bit about L1.
Yeah, so L1 is a on-chain wealth and asset management platform. We call ourselves the operating system for on-chain wealth and asset management. And we call ourselves an operating system because we are actually bringing together a lot of existing infrastructure that's already out there, that's already been battle tested, that millions of people are using every day. And we're making it accessible, easy to use, and when you bring them all together, it makes it even more valuable than if you were on your own, trying to utilize them individually. And we do that for financial advisors, namely investment advisors, a lot of family offices, multifamily offices, broker dealers. We also do that for asset managers who want to bring strategies and various different products to market on chain. And then ultimately for investors who are increasingly on chain, who are very comfortable with the notion of being their own custodian with self-custody, and bringing all of them together and allowing them to do some work around financial planning, wealth management, and asset management.
Really interested in what you just said about bringing all these things together. What specific things are you bringing together?
So first of all, we started with a protocol by protocol approach. So the very first thing we did was let financial advisors to recommend swaps to their clients. So on-chain swaps using decentralized exchanges. So they could recommend things like rebalancing, tax loss harvesting, basically getting a new position, and basically doing anything that you could do with a swap. So that was step one. Then advisors started asking for other things like liquidity providing. One of the greatest things about DeFi is the fact that you and I can be market makers. We can set aside a portion of our portfolio and provide liquidity to a decentralized exchange and generate yield on the assets that we already hold. And traditionally, this is kind of only available to either large institutions and market makers that have the size to provide liquidity. And if you want to lend your securities, for example, in a prime brokerage, you're going to see some hefty fees. And I mean, that's not available to everyone. So liquidity providing was the second request. So we started with swaps provided by 0x protocol. So we use 0x for swaps, which is a DeFi exchange, a decentralized exchange aggregator. I think they support over a dozen different exchanges. And when you request a quote, you're getting the best liquidity and the best price across all of these decentralized exchanges. So 0x on swaps, Uniswap v3 for liquidity providing. And then requests started coming in for other things like lending and bridging. So lending, for example, we support Aave v3, and advisors can actually suggest that a client collateralizes any one of their assets and then borrows against it, or they can manage existing loans and manage the risk for those loans. And bridging allows advisors to suggest clients to move assets from, like, let's say, Ethereum mainnet to an L2. So when you look at all of these different layers that we've added, what started as a swap now can turn into a whole array of steps that actually makes up a strategy. And so advisors can now do some pretty advanced recommendations, like a multi-step recommendation. And then we took it one step further, and by allowing asset managers to come in and create their own portfolio models and their own strategies, advisors can now allocate to a basket of tokens that is actively or passively managed by a third party, a professional index provider or asset manager that has a research team in place that is basically looking at all of these positions every single day, and that is making their own decisions on when to rebalance. And advisors can now also allocate to those in one click, so they don't have to go through all the different steps of like suggesting a swap and rebalancing and keeping track of all of that. So we've basically streamlined that for advisors who are technical and knowledgeable and that have the time and that want to actually suggest these bespoke types of recommendations, or the advisors that just want to press a button and allocate to an on-chain strategy. And then we took it one step further, and we started seeing a lot of demand on tokenized funds, not just crypto native assets, but tokenized, let's call them real world assets. And we integrated Securitize into our offering, and we are now also bringing access to tokenized funds through the platform. So we now support all of these different use cases, and individually they're great, and I mean they're getting a lot of usage out there by crypto natives. But when you bring them all into a single kind of under one roof, you start to kind of really bring a lot of utility and value to these allocators.
Okay, you just said a whole bunch of things that we could really unpack. There are so many benefits that you just mentioned there. And so I remember initially when we were talking, you were telling me how you really are doing a lot of education and going out to, the offices and talking to RIAs, and and you mentioned that when you tell them the notion about being able to be a market maker, that their jaws just drop, right? Would tell me about, when you first started talking about market making, and the light bulbs went on for them.
Yeah, I think a lot of different use cases kind of make different people realize the potential of tokenization and on-chain rails. I think market making is a clear use case. Many advisors get really excited about that. Tokenization of alternative assets also makes a lot of advisors really excited because they go through the pain of allocating to, let's call it, a traditional like private credit fund that has quarterly disbursements and redemptions. And by tokenizing them, you can allocate to them 24/7 and get near instant, for many cases, instant liquidity on those with no minimums or very low minimums. There's a lot of different options out there for tokenized private credit, but you don't need to talk about like very technical things like ETH staking or restaking and all these different things that kind of are kind of the everyday conversation of crypto native individuals. It can be something as simple as being a market maker yourself or tokenizing a private credit fund to help advisors understand the potential. So I think that it's going to take a while. It's not going to happen overnight that suddenly they're going to make all their clients kind of become a market maker on a decentralized exchange, or they're going to be allocating to tokenized funds. But it's going to happen as a lot of the firms that are differentiating themselves, that are talking to the new generation of clients, start to get market share, gain market share. And then I think at that point, you're going to kind of see that overnight effect of adoption.
Speaking of adoption and the younger investors, which I think your company really represents, because they are already, investing in some type of crypto and some type of on-chain product. So we've got the baby boomers who are passing on, what is it? I've got it right here. It is an $84 trillion worth of wealth through 2045.
Mm-hmm.
And that is something that you are addressing as well, correct?
And that's happening today. I hear from advisors. Just a couple months ago, one of our customers had a client, and at that time, a prospect approached them. And the prospect is somebody in their 30s, I believe, definitely a millennial, and comes from a wealthy family who has been working with a financial advisory firm for generations, for 2 generations at least. And this younger investor is already in the process of inheriting some assets. They are already invested in crypto. They are very exposed to crypto, and they were switching advisors because their parents and grandparents' advisor just does not. It's not that they don't get crypto, is that they don't even believe in it, if you even had to believe. And so they're completely ignoring the fact that new generations of investors, the children and the grandchildren of most clients, are basically expecting advisors to, at the very least, address crypto. And crypto today is very much a new asset class, but tomorrow it'll be the internet of asset classes. And so if you're working in the business, you need to start having the conversations. And if you're not allocating to it actively, at the very least, you should understand how it's going to impact your business, because the transfer of wealth is happening. $80 trillion is is a lot. And every year we're going to see trillions actually migrating to not entirely on chain because most assets are not on chain yet. But it's just going to get accelerated. The tokenization of assets is going to get accelerated by this transfer of wealth.
So let's delineate between cryptocurrency, which is something like Bitcoin, and tokenized real world tokenization or tokenized securities.
So there's, I mean, obviously any asset can be tokenized, and the question is, where do we start? I think there's a number of forces at play here. I think one of these forces is very much client driven, and another is advisor driven. I think the client driven force is the most powerful because it's not just the technology that is there and just by existing it gets adoption. I mean, tokenization has been possible since 2017, 2016, since Ethereum launched. What's actually changed is that there are now over 52 million Americans with a Coinbase account. Many millions are on chain, self-custodied, and these investors who tend to be younger have experienced this new form of investing and holding money on chain, and they now expect their money and their assets and their portfolio to be available all the time when they need it, and they expect instant liquidity. They expect instant settlement. T+1 is just so foreign for a lot of these investors, many of whom, by the way, have started investing through crypto, not through stocks and bonds. And so these investors are expecting something very different from what traditional finance has been able to offer and has offered for the past century. I mean, the expectations have changed, and so that is actually what's going to drive adoption to tokenized assets. So that's kind of the first step. Then these individuals have accumulated and created a lot of new wealth on chain. When you look at stable coins, for example, up until a certain point in the bear market, there were about $150 billion in stable coins, which was basically sitting on chain. And these investors were not actually looking to go off chain. They were looking to hold those dollars in tokenized form. I'm one of those investors myself. And so many of the traditional players started looking at that opportunity and said, okay, there's $150 billion in tokenized dollars out there. And that's basically generating interest for the issuers of those stable coins. There's potentially an opportunity to allow these investors to capture that yield. And that actually led to the launch of all of the various different tokenized treasury products that we've seen. And so that's kind of it's a direct response to what's actually happening and what these investors are doing. So to think about what's next, I think you have to start looking at what's happening on chain already. So being client driven is, I think, one of the things that these issuers are doing. They're looking at what these clients are doing, what they expect, what they need. And then advisor driven is kind of the other force. I think advisors are changing some things in their business models as a result or a direct response of what clients are demanding. But there's also a huge shift happening. Those are really looking well beyond the traditional 60/40 portfolio. More and more firms are allocating to alternatives. So alternatives are becoming very interesting to a lot of the new gen RIAs out there. And alternatives are private markets, and private markets are inherently illiquid. They're very inefficient. Price discovery is challenging for a lot of assets. And I think that's what's actually driving a lot of the tokenization efforts around some of these alternatives, such as private credit, private equity. We're seeing tokenized real estate, commodities. I personally think we're going to see a lot of interesting things around tokenized bonds, and especially tax advantaged and tax efficient bonds. And I think that's a combination of client demand and advisor demand. But it's going to play out in the way that kind of client and advisor demand determines that should be the next type of asset or asset class being tokenized. So when you differentiate between, I think that your question was, and sorry, I went on a rant here, but background.
That's all right.
Differentiating between a tokenized real world asset and a crypto native asset. Basically, crypto native assets are assets that are inherently on chain, that only exist on chain, that are issued on chain, and real world assets are assets that today exist in the physical world, in the off chain world, that are brought on chain through tokenization. And I think we're going to see the two converge very soon.
I think what I'm hearing is that the attitude of the younger investors are looking for a lot more social impact. It's not just about, how much money am I going to make, but it's about, belonging to a community and the social impact. And you mentioned bonds. And I was just writing a story about a company, I forgot the name, but they were tokenizing bonds, and this is in Europe, for microloans. So don't you think that this is the type of investment that the younger generation would be looking for?
Well, I do think that the younger generation cares about impact and belonging to a community. I think there's a lot of that being on chain enables. I mean, NFTs. When you look at NFTs, it really is centered around communities. Meme coins, this huge phenomenon is all about belonging to a community. And a lot of people really hate on meme coins because they don't have any fundamentals, and like, it's like they are created out of thin air, and there's nothing behind it. But there are communities in some of these projects. And younger investors and young individuals want to be part of these communities. I think there's I mean, if you want to be cynical about it, though, I think investors want to make money. Investors want to beat the market. They are very much disillusioned by the traditional markets. They are not looking to allocate to a 60-40 portfolio, which is why the younger investors are not running after traditional financial advisors. The other thing that's happening is that these young investors are very much a self-directed generation. I think more than impact and belonging to a community, they want control. They want to be in control because they've seen their parents and their grandparents go through a lot of crises in the last decades, where some of them lost their money, some of them lost their homes, some of them lost their savings and their retirement money, and that's why there's such a movement around being self-sovereign and really self-custody, because it actually puts you in control. So if you're naturally self-directed, self-custody enables just the best of both worlds. It helps you have custody at all times and being the only person with access to your funds and assets, but it also allows you to make decisions. So advisors need to switch roles a little bit and go from being just the person that is making every single decision, that is kind of abstracting away the investment management and the discretion over a portfolio, to being more of a coach, more of a co-pilot, more that's looking out for their client, but the client is very much still in control. Their client is still very much self-directed in a lot of ways. That's what we're seeing.
Yeah, I would think an investment manager would really like this, because that means a lot less of the everyday clerical work that goes on, that's really not focusing on, what their talents are and actually being able to help their client. So it's kind of like you've got an AI portion in here that's, doing the everyday work that, is not about thinking about what's best or what's in the client's interest.
Absolutely. I think this is going to create a lot of efficiencies. It's going to allow advisors to scale, grow their practice, and focus on what truly matters, which is really understanding the needs of your clients, your clients' goals, and aligning their investment decisions and objectives with those.
What kind of advice would you give to the older investment advisor, maybe the ones who've been around for 25, 30 years?
I think it's always hard to change is hard. Most people don't like change, and I think the older investors that have been in business for decades have already gone through a similar period of change, which was the internet. I think the internet changed the way that advisors at least communicated and managed information and onboarded clients. And I can imagine it was a challenging time. Now you have a new internet, an internet not of information, but of money and assets. And when you think about the next 25 years of your practice, certainly if you want your firm to be in business for the next 25 years, you really have to embrace the internet of money, which is on-chain rails. And so I talked to a lot of advisors who are building like a generational firm who maybe some of their family members, their kids are taking over. And I think from those, we are seeing a lot of willingness to learn. And usually they bring their kids or some of the kind of younger partners and associates to have a look at what we're doing, because chances are those younger individuals are already in crypto, and they are the champions and the people that actually educate the rest of the firm. There's a group of advisors who simply don't want to change, and they're making a really good living. They're collecting their 1%, 150 basis points of a few $1 million, and they're making money. And they're like, why should I change if I'm retiring in, like, I don't know, 5 years? I don't try to like convince people that they should adopt a technology or that they should change their business. That's not my place. I'm there to help you embrace a new paradigm and continue to build a generational firm. And if that's something that you believe is aligned with the future of your firm, then we'll be partners. Otherwise.
So, in general, doesn't matter what age, what advice would you give to RIAs at this point in time, this point in history?
So I think we're in a turning point in the markets, in like market structure. We're seeing, I think historically it's been pretty straightforward for advisors to create portfolios, like 60/40 portfolios that maybe have like different levels of risk and that appeal to different client profiles. And they sort of just like had to ride the market. We've been in a bull market for decades and decades. Like there have been some corrections along the way, but it's been a multi-decade bull market. That's starting to change, and we're going through some unique like times. If you look at interest rates and you look at what's happened over the last few years with bonds and stocks being highly correlated, it's making the job of advisors more challenging than it has been. And so I think every advisor out there is thinking, how do I basically continue to help my clients beat the market and see returns, and in this case beat inflation, which has been through the roof. And so that has to start with you can't expect to continue to do what you've done for the last decades, and expect you to continue to return the same in performance that you have provided to your clients. And so advisors are differentiating themselves. They have to differentiate themselves. So I think differentiation can come from technology and innovation, and looking at what other products and asset classes I can invest in to generate results for my clients. And also, where else am I going to drive growth? Biggest growth is actually, in my view, going to come from this generational transfer of wealth that you mentioned. And so embracing this younger generation of investors and clients, I think, is going to have the biggest return for these advisors. And so understanding what those investors are looking for, what they need, and their expectations would be my biggest recommendation. So engaging with clients who may be older, who may be boomers, and asking them about their children, their grandchildren, and understanding like what their goals are when it comes to estate planning and passing their wealth down to the younger generation.
Education is going to be important. So I hear you saying that, everyone needs to really understand what's going on with blockchain and tokenized assets, and being able to add this new product to your advisory.
Absolutely. Education is going to be key. I think for early adopters, it was very important to understand how the technology worked. I think most people shouldn't need to know how the technology works. I think most of the new entrants to the space, most of the people that are going to start allocating to on-chain products, are going to do so without really realizing that they are quote unquote on chain, and that they're using a blockchain, and that they're doing all these things behind the scenes, just like we use the internet, without really knowing how these protocols work. So I think education needs to shift gears a little bit from like how the technology works to, okay, let's look at what these products are on chain, how they are different from off chain products, why they are more efficient, why they might be more liquid. And I think that's going to really pique the interest of allocators, of investors, and the people that participate in the ecosystem.
And what's your take on the adoption rate here? You think it's going to take a really long time, or do you see it happening quicker than people imagine?
I think as a whole, when you look at the 100 trillion plus of assets that exist, I think that's going to take a while. I think when you dissect different asset classes, I think some of these are going to be tokenized faster than people realize. I'm pretty bullish on the tokenization of assets that drive, for example, tax efficiencies, and that allow investors to create, I don't know, like tax-free income strategies. And whether that's like municipal bonds or some other tax advantage products, I think we're going to start to see a lot of adoption there. And ultimately, it's the investors who ask for these things. And so you got to look at the money. Where is the money? Just like issuers looked at the $150 billion in stables on chain, and they went and issued tokenized money market funds and treasuries. You have to look at what else is out there and what are these investors looking for. I'm seeing, at least in our conversations, that crypto native individuals and people that have now moved a lot of chain want to remain on chain. That's kind of the main behavior across the board. Once you are on chain, it's hard for you to want to go off chain. That's step one, which is actually the reason why there were $150 billion in stables, because investors did not want to go off chain. And so what happens after? Well, they're going to have to start doing their estate planning and their tax planning on chain. And so we have to start bringing the products that are going to help them achieve their tax planning goals. And I'm talking about one use case, right? But tax planning is important. And I think tokenized bonds and municipal bonds are are going to be part of that solution. So I think we're going to start to see that happening, and it's going to take months. I don't think it's going to take years at this point. And we're excited to kind of be in that movement, and providing feedback to issuers and allocators, and sharing what we see in our platform.